Hello guys, greetings to you all. Welcome to this session. So today we are going to be talking about identifying breakout structure. Remember, we have already talked about let me see, we have talked on the fair value gaps explained. That's our last lesson. So that was phase 3. That was the ending of phase 3. Fair value gaps, explain BC and the CB. That's a very important topic. So you need to rewatch the lesson, practice, and practice again. So today we are going to be talking about identifying breakup structure, and our next lesson will be stoppage BMS and the RTO. Okay, so identifying breakup structure, let's get straight to the charts and then we'll see what we have there. Okay, so this is our chart here. This is US dollar sheriff. So if you look at this, you will discover that we are on a downtrend, right? Price has been creating lower lows and lower highs, lower lows and lower highs. So this is actually a downtrend, which means that the institutional order flow here is bearish, right? Remember that our main focus is to identify the IOF, right? IOF here is the king, right? Is a key. Let me put it that again, IOF. Here, IOF is a key to all these things that we are going to be doing here. Okay, because if you don't know where price is going to, you will likely not know which structure you should focus on, right? For example, if you look at this pair from here, now you will discover that price actually break this structure here, right? If you look critically, you see that price broke that structure. But why did it not hold? Why did the uptrend not start from here? This is because the IOF was still bearish, okay? Price was seeking for this liquidity down here. Which is type of liquidity is this? This is a sell side liquidity, right? We have triple bottoms. Price was looking for this sell side liquidity. And once price has taken this sell side liquidity now, the next thing that we are going to be looking at for is to start seeing, if we start to see a structure shift now, we will now know that price is now looking for external range liquidity, in this case, which is going to be the buy side liquidity. Okay, price will be coming for these highs. You understand? So after price has taken the sell side liquidity, we are now looking forward to for price to come back to this to the buy side liquidity. That's how price moves from internal liquidity to external range liquidity. So at this point now, we are still on a downtrend because price is still creating lower lows, lower highs, lower lows, lower high, lower low, and a lower high. Okay, so if the downtrend is to continue, price will create a lower high and create another lower low. Okay, that's how the structure according to institutional order flow will be. All right, but now we have taken the sell side liquidity, which was what the market was looking for. Okay, we have taken the sell side liquidity, which was what the market was looking for. Now, this is just a structure of a market of the market. This is an uptrend, price breaking, like in our topic, break of market structure. Okay, identifying break of structure. All right. So in this case, this is our break of structure here. When price breaks a swing high, creates a higher high, right? That is a break of structure. We call it BMS, right? Break of market structure. Okay. So here is another break of structure. Here is another break of structure here. And this is another break of structure. So this is an uptrend. A downtrend is just the opposite of this. Okay. Price will be breaking lower lows and forming lower highs. All right. So now at this point, remember I said institutional order flow here is the key. All right. Is a key. So at this point, the institutional order flow was bearish because price was seeking for sell side liquidity, which is this sell side liquidity here, right? These areas that look like the like a resistance, like a support level. So price came right down, took out the liquidity. So what are we expecting now? Like I said, if price should start breaking higher highs, it therefore means that our structure is changing. Okay, this is a higher high and this is a higher low. Remember, I said when you want to spot all these things, it has to be so obvious. Okay, you don't have to force anything. You don't have to force any structure in the market. All right, it should be very, very clean that even a small child can see, which means that you should not be looking inside an area like this to say that this is a structure whatsoever. Mark the most obvious structures. Okay, so with this, let's just see if we have a break of structure here. It therefore means that price is coming back for this high. All right, which means that now any break of structure up will be a valid structure for us to trade on, right? And in our previous videos, we talked about other blocks, right? So which means that if price starts breaking structure to the upside, we'll start identifying other blocks or BC and the CB to take our trades on. Okay, so which means that even if as price is going up, if we have a break of structure like this to the downside, it doesn't mean that its trend has changed, right? It doesn't mean that the trend has changed yet. Okay, because this can just only be, these two can only be like this here, which was just to clear out liquidity and continue going down, right? That's why most of the time, that is, we say trading, you will not have 100% win all the time, right? Price might come back down, clear the low, and then go back or break a structure and continue the uptrend, right? So that is very, very important. So at this point, like I said, if we start seeing break of structures, then we are going to be looking for buy opportunities. Okay, we are going now to be looking for buy opportunities because price has taken what it was coming for, right? If they send you somewhere when you have delivered the information or you have taken what you were to take, at least you have to come back home, right? I mean, or you have to go for another errand, like let's just say this UBA or taxi drivers. If you carry somebody to a place, you have to go back to the park, right? Or you carry another passenger to the other side. That's how price moves. Okay, from a liquidity zone to another liquidity zone. Suppose that it came and then it took some passengers down here and it uploaded those passengers that were selling. The passengers that were selling, they make a lot of profit, and as price drop, they had to drop from here, right? They sell passengers, they left the bus, and now buy passengers, they enter. They are buying now, price should now be coming up. This is where their bus stop will be, right? At the buy side liquidity, okay? So as simple as that, as simple as that. Price came with looking for sell side liquidity, and it has taken the sell side liquidity. Now price is going for buy side liquidity. And for us to confirm that that's what price is doing is when we see price breaking structures. Okay, it's when we see price starts to break this lower high and then to form a new higher high and things like that. Okay, that's the only time that it will be confirmed that price is actually starting to go back for the buy side liquidity. Because with this, price could still continue going right down, right? Going down for a long time. It happens, and there could be still be some liquidity levels right down that we might not be seeing on this weekly time frame. Maybe on the yearly time frame, you could see that price came up from somewhere before it reaches this level, and price might be going back there to grab the liquidity. But for the purpose of this video, I will not be going too much on the higher time frames, right? I just want to identify how to identify break of structure in the right way, okay? In the right way. Like I said here, if you don't know how to identify structure in the right way, you are going to see this as a break of structure to the upside. And once you enter a buy position, you are going to be kicked out. Why? Because price was still looking for structure, for liquidity from the downside. Okay, now this is another level here. If you could have considered this as a bearish break of structure, which is like this, you will start to think that, okay, you are going to enter your trade from this other block just to be taken out. Why? Because price still had some liquidity to clear above this level. Look at this level here. This was still a liquidity for price to come up and clear. So price came up to the liquidity, and then what happened? It gave us a break of structure now to the downside, which means that price now is actually coming for the sell side liquidity as it has taken this old highs here. Okay, now price started to drop, came back up, feel this imbalance, it dropped again, came back up, feel this imbalance, it dropped again, and then we have taken now the sell side liquidity. So let's see what price offers us here now. Okay. So remember I said if we have a break of structure up, that means our price is going for the external range liquidity. If you look at this now, you'll see that price has broken this structure. So what am I going to put there? I'm going to put positive BMS, right? Positive BMS. Let's just leave it at 14. We put it at the top, and then the text alignment, let's put it on the left, right? So here is our BMS. Price has taken this high. What does this signify? That price is about going up, right? Price is about going up. Okay, that's just a signal that we are done with the sell side liquidity, and now price is trying to look for buy side liquidity. Okay, as simple as that. There is nothing there to worry about or whatsoever. Okay, so now where did the highest push start from before we break the structure? If you look critically, even on the videos of the other blogs, you will discover that this down candle here has something to do, right? From this down candle, we saw a momentum push to the upside, which caused a break of the structure, which means that the sponsorship from the others, or where price started from, was from this candle. How do I put it practically? Let's use the example of the taxi again. So this means that here is a pack. All right, this is a loading pack, and when a taxi is here, it loads very fast, which means that it's like an area where you have a lot of passengers, right? A lot of passengers here, I mean orders, market orders. So if a taxi comes here, it doesn't take time to load, right? So which means that at this point it's like a park, and where you saw the taxi did not take time, it took off as fast as possible, clearing this liquidity here. All right, so and now if the taxi man is coming back, he's so much confident that he's going to meet passengers here again, as compared to what happened. Maybe he left passengers behind because his taxi was full. All right, so we have already have a confirmation that we are going for an uptrend, right? So let's play and see what happens. So our taxi man is back, and he has taken some passengers. Maybe the taxi was not really yet full, so he's taking some again on the roadside. And or maybe some people were not going directly, as it is always a fight between buyers and sellers, right? So maybe keeping some people on the way, taking liquidity. So you see price actually is creating higher highs now and higher lows, right? And our main target is for price to come up for this liquidity up here. Remember I said the institutional order flow here is a key, right? Is a key. You need to know where and why price is going to a particular area. And if you do know that, then your break of structure now will be very, very clean. It will be very, very easy for you to follow your break of structure. Now, looking at this particular area again on the lower time frame, you will discover that here we had a break of structure, price came back, feel this inefficiency, went back up. Then again, price broke the structure here, right? So it came back, rebalance this level, this inefficiency. It went back up again. It did not break this structure, came back down to this other block again, and then it went up to this level. Let's just put this here. Okay. So I want to make you to understand that institutional order flow here is the key, okay? Institutional order flow here is the key. So looking at this level, which means that since we are bullish, we are going to be looking only for buy opportunities. But now, let me show you something here. This is a higher high and this is a higher low, right? What is this? This is a failure high. It's not higher than this. So this is actually a lower high, right? And this is a lower low as compared to this one, right? As compared to this one. But now when you look at this is a higher low and this is a higher high, right? Now this is a trading range, so price hasn't taken this low yet, but it has formed some internal range liquidity to confuse people who don't really know where price is going to, right? So because according to these people, they'll be expecting that this high now, since it's already a bearish market, lower low, lower high, lower low, lower high, and then a lower low, right? That's where they'll be expecting price to form. But you need to know that price is seeking for buy side liquidity. And because of that reason, you are not going to be in a sell, right? I'm using the daily time frame because price is fractal. Remember that always. This what I'm showing you here. You can see it on the 1 hour, 1 minute, 1 second time frame. All right. Any other time frame, market is the same. All right. The market is the same. So I wanted to bring your attention to this level. Here is another clean break of structure. Now, where did this? Where's the park where this taxi left to these passengers? Right up to taking this structure, right? So let's say this level is like a police control, and then this taxi man had to pass the police control. So maybe he uploaded these passengers, and now he's back to this park, right? So this is the origin of this move up, right? Which is our bullish order block, okay? That's our bullish order block, the last down candle, right before the move up, before the strong move up, okay? So this is our bullish candle now. If we want to take a buy trade here, we are going to be taking the trade, and then our target will be right up, right? Since that we know where we want price to go to, which is the buy side liquidity. We know that price is seeking for buy side liquidity, which means that if we are taking a trade from here, our stop loss will be below this order block or this swing low, anyone you like. So, but let your stop loss be below this area, right? And then now your take profit, you can extend it to the upside, okay? So at this point, you are only buying because you know that the institutional order flow here is bullish. You are not going to be looking for sales. If you're looking for sales, you are going to get burned, right? Now, for example, looking at this area here, some people would have seen this to be a bearish order block, right? This should have been a bearish order block. Actually, it is, but it is not in line with the IOF, right? It's not in line with the institutional order flow. That is why it had to fail. Okay, it has to fail because it's not in line with the institutional order flow. Now, what of this one here? What of this one? Will it push price to go lower? That's a question for you. So you need to know what to say in that situation. This is actually a good order block. It had to break a minor structure here, but it is against the institutional order flow, right? So which means that it can actually push price a little down to our main POI, and then price goes up this way, right? As simple as that. Let's just play it and see. Okay. So price has come back to our bullish order block, and from there, we have seen bullish movements, right? Did you see this man hold price? It did push back price down just to come to this level, and then price continues up. Now, this is because price doesn't move on a straight line, right? Price doesn't move on a straight line. You need to know that. That's why you have these counter trend order blocks. They will be the one to make price to move in a zigzag form, okay? They will be the ones to make price move in a zigzag form. Now, at this point, we know that price cannot just be shooting up like an electric pole. It has to come back down, which means that we have a BC here that price will come back and balance it up. Now, I gave you a lesson on this. You should know what has happened within this candle, right? Only a particular, that's only buy orders were present at this point. I don't know any practical example to give here, or should we say, okay, let's just forget about that. Only buyers were present in the body of this candle at this area, okay? So we expect the market to rebalance it, which is called internal range liquidity. Remember I said the market moves from internal range liquidity to external range liquidity. So this is what we can be expecting here for prices to go up. Once price clears this high, we can now be expecting a retracement, then to grab the internal liquidity here, and then continue with our uptrend, all right, to seek for the external liquidity that we spotted on the weekly time frame. Okay, so let's just play this and see. Price came back to the inefficiency and even right to this other block here. Right. I'm right to this other block. Why did I use this one, not of this small one? Remember, the last down candle or last up candle that you are choosing as your order block should be a healthy candle, right? It should be a healthy candle, a candle with a good body, right? You can ignore little body candles where when there is a big candle around that area, all right? Yeah, that is it. So when you have a situation like this, you choose the big candle, all right? Choose the body, the candle with a big body next to it, okay? So let's continue. Price has come for the external range liquidity, which is actually our BC. Let me just put it something there, BC. Let's put it at the right side of it and then inside, okay? That's our BC right there. So if we enter a buy here, where are we expecting our first take profit to be? Somewhere here, right? What is above here is called buy side liquidity. Okay, buy side liquidity, you can just put it BSL. So that is the area there. If we could take this buy from this other block here, put our stop losses down here. Remember that we are still on this buy and we are already around 1 to 3. So taking this one only up to this level is also already giving us 1 to 4, right? 1 to 4.5. So let's just continue, but remember that our main target is right up, right up, right up, right up, somewhere on with this purple line, right? So let's just continue to play price and see. Remember, like I said, price as our institutional order flow is bullish, price will be creating, we will be interested only to see price create higher highs and higher lows, higher highs and higher lows, as simple as that. All right. So this is where price is currently sitting right now, right? This is where price is currently sitting. Now, suppose that you never knew that that our IOF is bullish. You could have considered this as a break of structure to the downside, and then you start saying that the market structure now is bearish, right? Now, actually, price sold from this other block, right? But remember, as I said, selling from this other block doesn't mean that price is now bearish, right? It's just a wave that will make price to move in its zigzag way. Okay, that's as simple as that. Price will always move in a zigzag way, and these are the levels that help make price move in a zigzag way. Now, suppose that price is going right up and there is no past price action to make price to move in a zigzag way, like I'm explaining here, like an order block. Now, once price breaks a high, what is above the high is buy side liquidity, right? So once it takes the liquidity, it retraces back for internal range liquidity. Once it's grabbed the internal range liquidity, it goes back again for the external range liquidity. Once it's done, it comes back for internal range liquidity, just like that till it hits a premium level where we start see a structural break to the downside and then the trend reverses. All right. So remember this and remember it well. Your institutional order flow video, watch it, and rewatch it again. You need to know where price is going to, master where price is going to. And just a quick one here, where will price likely be going to? There are a lot of them. I'm going to be sending you guys something like that in the course of the lessons, right? Which starts with previous weekly highs, previous monthly highs and lows, previous weekly highs and lows, previous daily highs and lows. Those are areas where the market will always be looking out for, right? Which means that here is a previous weekly high, weekly low, weekly high. You see price came down for this, it took this low, went back up, it didn't take this one, came back down, took all these lows now. So we are now, price has taken this low, taken this one. So price is now seeking for buy side liquidity, right? So that is how it is. You have to know where price is going to. And where price is going to, if you see price go up, create something like this, equal highs, and then it trades down, grabs any sell side liquidity. At this point, if price starts making a break of structure to the upside, know that it's coming for these two equal highs, right? And it's actually forming what we call a market buy model, right? We are going to talk on that. So when you see two double equal highs or equal lows like this, know that that's an area that will draw price to itself, right? Now, if there are three, that's another high probability level that price will be drawing closer to them, right? That it is going to draw price. Remember what I said from this from the level that price was actually dropping, and when it dropped to a certain level, look at this area here, price clear this liquidity here, right? How many lows do we have here? 1, 2, 3, 4, 5, right? So after price cleared it, we had a break of structure from the weekly time frame. Price reversed back to the other block from the weekly time frame, and then till then we are seeing upward movements of price. All right, up to this level where we have this current move now. Remember that from the daily time frame, I mean from the weekly time frame, this line here is this line is where we are looking as to be our external range liquidity. Let me just go back to the weekly time frame, and then we'll see reasons why price should come up to that level. Now, remember I just talked of double tops or equal highs. Here you have it here, right? All these equal highs here, price is going to be coming for them, right? So as it is right now here, as a long-term trade, we will be seeing that price will go up, come clear the liquidity, maybe continue going up as we still have buy side liquidity all around these highs, right? Price will be taking these highs since it's going back for buy side liquidities. You saw how price took the sell side liquidity here, started going back up, right? That's how price move. If you don't know where price is going to, you will not know which structure should you take, right? Because in a downtrend, you actually see price. In a downtrend, you actually see price breaking higher highs, but continue creating lower lows. So, which means that you need to know where price is actually going to, right? You need to know where price is actually going to now. Price will make a structure shift, start creating higher highs. You'll still see something like this, a break of structure to the downside, but it continue going back up. This doesn't mean that the trend has changed. Maybe it's just coming back down to rebalance something here or fill another block. Same thing here, okay? But it doesn't mean that the structure has changed, right? Just like in a quick example here, this is just a quick example. You can see that at this level, price came back up to touch this other block here, right? Price came back, let's see, is that the area? Okay, we had a fair value gap right here, okay? We had a fair value gap right here, the open of that candle to the open of this candle, right? That is called a CB, right? That's a CB right there. So, but what happened? You will discover that actually this high did not feel that inefficiency. So up at above this high, we have a sell side and we have buy side liquidity, right? So price came back up and cleared this now. This should not be like, this is not a structural break, right? It's not a structural break. Price was just coming for internal range liquidity. So you can see how the downtrend continued, okay? The downtrend continued right down, right down, right down, right down, just like that, okay? So that is it, guys. That is it. I don't want to make this video long, so try to watch it again, go to the charts, you back test, right? That will help you a lot.